Welcome to the podcast that helps you protect, preserve, and improve your small business capital the right way. Your host, the Funding Doctor.
Hi, welcome to the Funding Doctor. Coming to you today out of Studio A at Lencred Corporate Offices. And today we're going to talk about your personal credit and how it impacts your small business funding. I've got CEO and President of Lencred with me today, Tom Gasaway. Welcome.
Thank you. Nice to be here.
Good to have you here today. Tom, let's kind of just jump in and talk about, a lot of small business owners. We'll kind of talk about the ones that are in business as well as the startups, out looking for capital, trying to figure out how to get started. And let's talk a little bit how your personal credit is going to impact you when you go out there so you know what to expect.
Yeah, I think it's a great question, Tim. And in leading into that, let's remember that the only reason people really care about credit is because it impacts whether we can get our loans and lines of credit. I mean, why would we care about credit if we could get financing without it? So it's the reason why it matters, right? And so there's sometimes a fallacy or an unknown truth that when you're a small business owner, and we probably think of small business owners as those people that are doing $10 or $15 million in revenue or annual sales or less. So it does comprise well over 90% of the small business owners that are out there. When you're a small business owner and you're looking for financing, the vast majority of the time, you're going to need, your personal credit is going to come into play. So, certainly we could go a lot deeper than that, but it's very important. And that doesn't mean that it's not a good idea to build your business credit, because business credit's also very important. We'll probably talk about that, but it does not negate the importance of your personal credit.
In most cases, if you're a startup, without good personal credit, there's just nowhere to go.
It's tough. Yeah.
Maybe if you've been in business for a while and you've got accounts receivable or you've got a Visa machine you're swiping through your merchant account, you might be able to find something. But of course, that's not usually the financing everybody would love to have. So your personal credit is going to be pulled almost 100% of the time, and it's going to matter to some extent. Let's talk a little bit about unsecured lending right now. What's it look like for me if I'm looking for unsecured lending? Do I have to be a 780, a 750? What do I have to look like?
Well, I think that's another great question. And one of the things, we tend to look for our financing online nowadays. We use search, we use Google, we use Yahoo, we use Bing. And one of the things about unsecured financing is maybe goes back to the definition of what do you mean by unsecured? Because you will see a lot of people promoting unsecured financing solutions when in fact they're taking liens against the business. And so part of what I think you mean, Tim, is do we mean unsecured financing where there is no collateral and there are no liens against your business in exchange for your funding? Or are we talking about kind of a hybrid type of unsecured funding, which is often used probably for marketing purposes to kind of draw people in? And we're not here to say that it's wrong or bad to collateralize a loan product. We're just probably saying let's call it what it is and not pretend to be something that it's not.
And there are lots of opportunities out there not to have to use collateral and get the unsecured funding you need. So a lot of people spend a lot of their time worrying about their score. And probably one of the things about that is, I think we believe it's way more important of what is making up that score. Because we've seen folks that have a 720 or a 725 that really don't have much credit and really doesn't work out as well as they would think it would, as well as we've seen people with 680s, 690s that have high depth files, been a large age of file, lots of trade lines that they've done well with over the years. It really is a pretty good opportunity for unsecured funding.
And this is what's interesting, when you look at unsecured funding solutions, and again, we're talking about, getting a loan or a line of credit where you don't have to pledge any collateral and there's not a lien that's going to be taken against your business. So no UCC filings, for example, is what we're talking about. And when you look at that, lenders aren't going to extend financing with no collateral to someone with shaky credit. That's unlikely, right? And of course, there's an exception to every rule, but by and large, that's probably not going to happen. So when you look at the options that are out there, your personal credit will be reviewed. And like you said, Tim, they're looking for more than just a score, and they go a lot deeper. And that's where building a robust credit profile and kind of thinking about your credit as an asset becomes really important.
Absolutely. Small things like a lot of people will, I grew up where, my parents said it's not good to have a lot of revolving credit, where in fact we know that helps bolster your credit as much as anything can if you have it and you've used it responsibly. And so a file having several lines of revolving credit that are used responsibly certainly is a much more positive file to a lender than one with one line that you've had for a few years and haven't used much.
Right. And this is where we've learned a lot over the years from John Olsheimer, Tim. John's probably the nation's number one credit expert for a variety of reasons. And John talks about the 800 Club a lot, where the large majority of business owners and consumers and people in general who have those 800 FICO scores, those high FICO scores, those excellent credit profiles, they are people that have large or healthy amounts of available credit. That doesn't mean we use it unwisely, and it doesn't mean that we get it for no reason. But when it's a line of credit, if we're not using it, we don't have a monthly payment. So we're not incurring debt, okay, to build a credit score. This is wise ways of improving your credit. So it is a good idea over time, with some sort of plan or strategy, to think about how I can have a healthy amount of available credit. It's 30% of a FICO score is determined by those balances or that utilization. And when you have healthy amounts of available credit and you have a few or several different lines of credit and credit cards, now you've also probably got additional trade lines. And as they get older, those aged trade lines help your credit profile a lot.
Correct. And so some folks talk with folks that tell them that they should build their business credit, because if they build a good Paydex score, then they're going to be able to go to the bank, and regardless of anything else, they're going to be able to go get their loans for their small business and get it financed. So kind of let's talk a little bit about that, because we absolutely know that to be not true.
Well, Tim, I don't know how to be more clear about this. It is absolutely important, especially now in 2014, for a business owner who cares about the future of his business and who needs or may need funding. It is absolutely important for that business owner to be building business credit and to be mindful of their business credit report. However, and this is a big asterisk, Tim, is by doing that, it does not mean, and again, remember, we're talking about small business owners who, not the guy who's got an $80 million company. We're talking about the small business owner who's doing less than $10,000 or $15,000 million in revenue. His or her personal credit is going to matter. So building your business credit is not going to allow you to walk into a bank and get a $100,000 or $200,000 cash line of credit without your personal credit being looked at. Again, we probably all love to see that as an option, but I don't think a lender there wouldn't be a lot of wisdom from an underwriting perspective in even doing that.
However, it's probably very true that if you've got strong credit profile and you've done that, then you're putting yourself one bar up, and you're going to have better chance of getting that financing you're looking for from the bank. Absolutely, Tim. And let's talk about the one maybe kind of asterisk or exception there is when you don't have good credit, but you do when you don't have great personal credit, but you do have good business credit, then those trade lines or those vendor trade lines where maybe I can go to Staples or to Office Depot or to Home Depot or to Dell Computers, those types of vendor trade lines where Dell might give you a 10 or 20 or 30 or whatever $1,000 line of credit. Now that not only can be done, but has been true for a long time, where that type of a business line of credit, when you have good business credit and not great personal credit, is very doable and reasonable. But we're talking, Tim, about the cash lines of credit that you can use somewhere other than Dell or Home Depot. Absolutely. Both are important. And I think, the important thing to know is, a successful business will have a mix of all of these different kind of products that they're using so that they don't have all their eggs in one basket. And certainly the business vendor credit lines are great for cash flow. Sometimes you can't grow if you're only depending strictly on your cash. Somewhere your limit comes when the cash runs short. And so having those allows you to grow your business quicker, scale it faster when you need to because you have access to that versus using your disposable cash. So it's certainly a great thing to have and responsible to have if you're a small business owner and as part of your full portfolio. And so I want to make sure everybody knows that's important. But that fallacy that alone is going to take you across the finish line is just not true.
And let's not lose sight of some of the data and some of the facts. According to the SBA, the second most common reason why businesses fail is a lack of access to funding. So it's important. And, being a business owner, it's always good to have these things in place before you need them, before it becomes a crisis situation. But all of these discussions about my business and personal credit, how do they fit? When do they matter? When do they not matter? Become important if you're going to plan and prepare for your business, not only being successful, but enduring. And you want to be thinking about if you need funding today, that's great and that's cool, but you can't do anything to solve this problem if you have a credit issue, if you need your funding today. What you can do is you can know how this works and you can think about in 6 months or a year or down the road, how can I position me and my business to have the funding we need when and if we need it to continue our growth?
Absolutely. So I think that the summary of all this would be that personal credit absolutely matters. And I think the one thing that, is truly important is in today's world, a lot of people hire people to help them do this, just like you hire your accountant and those sort of things. You probably wouldn't have your accountant do it. Some will, but you probably want an expert in this field, and you probably want a credit expert because a credit expert can lead and guide you on how to make that personal credit as stellar as it can be before you go in front of a lender. So making sure that if you're working with someone or in the future you're going to go work with someone, that you're working with people that are FICO Pro certified and understand credit and your FICO score and how that impacts and how to impact that score quickly for you if need be. So I think that's a really important piece of this as you're looking for that business credit, and to understand that this myriad of different options that are out there, they're all important, but there's steps you probably have to take first, second, and third that get you over the finish line. Yep. So making sure that everyone understands that, personal credit is number one, first most important thing if you're going to be a startup and get that business off its feet. Even if you've been in business for 10 years, Tom, and you're going to the bank and looking for a traditional bank draft, if your personal credit and your DTI and that is out of control, it's not going to matter how good that business was.
And Tim, this is the other thing we got to make sure that we touch on is, the non-bank lending arena has grown dramatically in the past few years. And it's one of the byproducts, in some ways, of technology, right? We have ways of quickly processing loans and helping underwriting to happen quicker through technology. One of the things you always want to remember and keep this in mind is we're not saying that if the bank says no, you're in big trouble. What we are saying is that the non-bank lending options that are out there will obviously always be higher cost and still have certain underwriting criteria. So there's a lot of lenders out there, Tim, who will kind of look and say, hey, based on your cash flow and based on what's coming in out of your bank account, we're not worried about you having a 580 credit score. We'll lend you this much money. And that's right. Okay. And there's a time and a place for that. But you kind of know, Tim, that we're probably a little critical because those are very high cost loan products most of the time. But remember, this is not an indictment on those models in any way, shape, or form. There's a time and a place for all types of financing. And I would encourage the business owners out there to remember that the funding that you need for your business probably isn't about the interest rate that's attached to the loan product. What it is about is your cash flow and how it impacts your cash flow, and does it help you either grow or keep your business, kind of headed in the right direction. So there's a world of non-bank funding solutions that are out there. We're well versed on them, and many of them are excellent, but know how they fit in. And if you need one, that's great, but think about the future of your business in a way that says, how can I have more options, and how can some of those additional options in the future be lower cost options for me and my business?
Well, I think, I know we could talk about this for hours because, we love talking about this stuff and about the kind of solutions that are out there. But I think it's a great start, help you understand how important personal credit is. Certainly, if you have questions, you should reach out to a professional. You can certainly reach out to us at LendCred or someone else, but get a professional to help you. It makes a big difference, and you're an expert probably in what you do, and there's people out there who are experts in your credit and helping you get there. So thank you again for joining me today, Tom. I appreciate it. And for everybody out there, thanks for joining us. We'll see you next time. Funding Doctor out.